Hello and welcome to Business Today with me, Steve Lai. Well, let's begin in China, where the government has laid out a plan to boost consumption, which has been a challenge to growth in the world's second largest economy. Policymakers plan to boost incomes and stabilize stock and real estate markets, and they will also offer incentives to raise the country's birth rate. The move comes ahead of economic data due in the coming hour. That includes the latest reading on retail sales. Well, for more on this, let's speak to Jameel Ahmad, Chief Analyst at GTC Group. Jameel, great to speak to you this morning. So what's the key thing to understand about consumer confidence and what it means for China's economy?
Well, essentially, Steve, what we're seeing is that the MPC have, for the second year in a row, set a 5% GDP growth target for China. And actually, this is somewhat of a surprise for 2025 when you're given the persistent trade aggression that China is expected to face. Also, when you consider that actually China struggled to get over the line, actually was sweating to get over the line for the 2024 growth target. In terms of consumer confidence and consumer spending, it's quite clear that the Chinese economy is trying to steer its way away from exports, imports, and those types of investment fields, and is actually trying to encourage Chinese consumers to spend more. And that's why you see like a 30-point plan is being released over this weekend. But there's a lot of talk and there's a lot of words in those plans. We now need to see actions and stimulus from the Chinese authorities in order to prop up the Chinese economy, which has struggled to show an economic recovery now since COVID.
Yes, and we're expecting some economic data out in the next few hours. So what will you be looking out for there?
Essentially, we're going to be looking out for the retail sales and any consumer numbers, because it's clear that Chinese officials and the authorities are very clearly steering the Chinese economy to be very focused on consumption, which basically means that the everyday person on the street in China needs to be seen and needs to be actually spending money. That's where the domestic consumption comes from. And you can also take into account when you've got trade aggression, external uncertainties, lots of threats around the global economy. That's why the Chinese economy, as Chinese authorities, are very strategically trying to get Chinese consumers to spend in order to help domestic economy in light of what are going to be prolonged and ongoing external risks.
Yeah, and talking about those external risks, so you mentioned sort of the trade concerns. Tariffs will be a big one given what's coming from the US. So how do you think those trade wars or those tariff conflicts will play out for both China and the US?
Nobody's a winner, and in fact, we saw somewhat of a preview towards what to expect between 2016 and 2018, where the US and China did have that tit-for-tat trade war, so to speak, which then led to the weakest year of global economic growth since the beginning of that decade, which of course was the fallout from the global financial crisis. 2025, though, version 2, this prolonged trade war is set to be a lot longer and said to be a lot more fierce in terms of its impact to the world economy. That's because the US here is the aggressor, but the US is trying to battle on all fronts, because it's not just targeting China, it's targeting numerous other trading partners. That's why you're seeing a lot of concerns over US economic momentum potentially falling off. You've got think tanks up in the forecast for a recession in the US for 2025, up to around 40 to 50%. That's all the way from around 15 to 20% just at the end of 2024. And you're also seeing some sort of deterioration in US economic data, but it was standing on a pedestal where the US economy was performing much better than its advanced peers. But that momentum's set to be facing a lot of risks over the weeks and months ahead.
Yeah, you mentioned the US being the aggressor and that there are no winners in a trade war. Is that what we're seeing then play out with the stock market in the US, the recent volatility that we've seen?
I would say so. I think that investors are starting to price in that 1 month ago, we were seeing these trade tactics as something of a negotiation tactic. That's because the tariffs, the threats were starting to be rolled back. If we talk about the likes of Canada, Colombia, Mexico, but now fast forward 1 month and we're seeing more and more tariffs being spread across the European Union, China, there's other trading partners that are now coming into the mix. And actually some of those tariffs that were initially going to be imposed on the likes of Mexico and Canada are now being retaliated and being accelerated towards more and more tariffs. So I think that's playing out in stock markets. And also, we had the first term, so much focus on economic stimulus, fiscal stimulus, as towards how the Trump administration would support the US economy. At the beginning of the second term, or the second return into the office, we're actually seeing so much focus on trade aggression and those types of trade wars that not enough detail is going towards how the administration wants to help the economy through other means.
Jameel, we'll have to leave it there. Thanks so much for your thoughts today. Jameel Ahmad, Chief Analyst at GTC Group.